everyone, it's Billy Abrams, CEO of ADM Securities, and myself, Alex Suslov, Head of Capital Markets at AD Mortgage, for our weekly AD Digest meeting here with you today.
Hello everybody. Hello Alex.
Hey Billy. We see Freddie Mac 30-year rates going a little bit down, about week over week changes down about 15 basis points, Billy, and we're at 5.1% on 15-year rates for Freddie Mac mortgages. We're at 4.3% this week, and our non-QM rates at AD were reduced by 25 basis points on DSCR loans and 12.5 basis points on our owner-occupied and investment loans with income by 12.5 basis points, as I said. And non-QM rates are averaging today the overall market in the United States about 6.75%. We see ARM loans are widening down due to expected reduced cash flow in the future when the rate resets. Since rates are going down today a little bit, ARMs are no longer thus favored by investors. We saw in April that US home prices reached their peak, and right after that, last week in May, we had an announcement on home sales that numbers were a little upsetting, shook market a little bit, and that also was a reason for the rates to go down. We had a FOMC meeting last week. Billy, what are our takeaways on that meeting? What do you think we should pay attention to?
So Alex, since last week, the markets, the treasuries have rallied. They've been fed by softer than expected economic news. 2 years, 5 year, 2 and a 5 year, both down about 15 basis points. 10-year down about 8, 30-year down about 4 basis points. So we're seeing rallies that are led by the short end of the curve. And then we got the minutes to the last FOMC meeting. And what they told us was the Fed now, whereas 2 months ago, 10 of the 12 governors thought Fed funds would be at 1 3/4 by year end. Now they think they'll be at 2 3/4 by year end. The significance of that is this: the 2-year got to 2.45 in the past week. If Fed funds are going to be between 2.50 and 3% by year end, one would think that there's not much room for the short end to rally anymore, and the short end has led the rally. So it's a little bit concerning to me. I think this rally otherwise technically would have more room to move. I think if the 10-year can get under about 267, it'll trade into the 250s. But if the short end is going to lead the rally, I think we're in a bit of a dilemma here where the short end maybe have bottomed out, at least the 2 years. So, and if the long end tries to rally without the short end, then the yield curve inverts, and that can't last for long. So this is going to get different going forward. We're going to have to pay close attention to it. I think this correction can be ongoing, but it may be more sideways now than towards lower rates.
Thank you for your comments, Billy. Those are very valuable, and we'll be looking to the jobs report next week. Also, A&D has received a Delaware license recently, so we're looking forward to receive new applications in Delaware State and looking forward to get in touch with our partners in Delaware. For our webinar sessions on June 7, we will host a webinar on bridge loans. On June 14th, we'll be talking about 1099 and WVOE loans and the ease of using those programs in order to qualify for owner-occupied or investment property. In case you missed any of the webinars that we're hosting, there are recordings on the AD Learning Center on our website. Please feel free to use that resource if you missed anything.
Perfect, Alex. That's all good news, and I look at those webinars myself, and it's a lot to be learned there.
Hope everyone had a great Memorial Day and long holidays. Billy, I really love your tie. What are the aircrafts?
Oh yeah, that's my Memorial Day tie. These are World War II fighter aircraft. So we have P-51 Mustangs and Flying Tigers and P-38s, and just felt like an appropriate tie for the day.
I love it.
Thank you.
Perfect. Thank you, Billy. Thank you, everyone. It was Billy Abrams, CEO of ADM Securities, and Alex Suslov, Head of Capital Markets at AD Mortgage, with our weekly AD Digest.
Thank you, everybody. Thanks, Alex.
Thank you, Billy. Stay tuned, guys.